Let's break down this chart carefully. This is euro dollar on the 15-minute time frame. Today I'm going to show you one of my favorite strategies that I use almost every day on this pair during the London session. Before we start, make sure you subscribe to the channel. I post clean breakdowns like this to help you understand how price actually moves. Now let's get into it. Now, before we talk about entries, before we talk about confirmations, I want you to notice one thing. The trend is clearly bearish. Lower highs, lower lows, and multiple breaks of structure. The market is not confused. Sellers are in control. And that is the first lesson. Never trade against a clear trend just because you see a small pullback. Look at this purple box. This is the Asian session range. Some people call it the Asian Killzone. During this session, volatility is usually low. Price moves slowly. It consolidates. It builds liquidity. Think of it like this. The Asian session is where the market prepares. London is where the real movement begins. Now, here is my simple approach. When London opens, I don't jump into trades. I wait, because London loves to take liquidity first. And where is liquidity resting? Above the Asian high and below the Asian low. In this case, the trend is bearish, so I am not interested in buying. I am waiting for London to push price up, to sweep the Asian high. Why? Because above that high, there are stop losses. Traders who sold during Asia place their stop above the range. Breakout traders place buy stops above the high. That area becomes buy-side liquidity, and institutions need liquidity to enter big positions. So when London opens and pushes price above the Asian high, most beginners think, breakout, it's going higher. But I am thinking differently. I am thinking, liquidity is being taken. Now here is something very important. The sweep must follow the trend. If the trend is bearish, I only look for sell setups. If the trend is bullish, I only look for buy setups. This keeps me aligned with the bigger picture. So London sweeps the Asian high. Liquidity is taken. Now, I look for the next piece of confluence, the unmitigated order block. Look at this red zone above. That is where institutions previously sold aggressively. Price left that area strongly before, which means there are likely pending sell orders still resting there. When price returns to that zone after sweeping liquidity, now we have alignment. Trend is bearish. Liquidity has been taken. Price is in a premium area. Order block is being mitigated. This is not random anymore. This is structured. But I don't enter blindly. I wait for confirmation. My confirmation is simple. I wait for a 15-minute or 5-minute candle to close with a clear CRT pattern. Let me explain that simply for beginners. CRT means candle range theory confirmation. I want to see rejection. I want to see a strong bearish close. I want to see that sellers are stepping back in, not just a small wick. A clear statement from the market. Once that candle closes bearish with conviction, I enter short. Immediately. Stop loss goes above the candle that created the CRT. Why there? Because if price breaks above that candle strongly, then the rejection failed. And I am wrong, and that's okay. Trading is not about being right all the time. It's about managing risk. Now, what is the target? Sell side liquidity. Look below. You see previous swing lows. That's where stop losses are resting. Buyers who entered earlier placed their stops below those lows. Institutions know that. So price will likely move down to collect that liquidity. And when it does, it moves fast. Because once liquidity is grabbed, the move becomes efficient. Now let's step back and understand the psychology. Most beginners see the London breakout above Asian high and buy. They get excited, they feel momentum, but they are buying into liquidity. Smart money is selling into that excitement. That is the difference. The market often moves opposite to what feels obvious. When something looks too clean, too easy, be careful. This approach is powerful because it is simple. Step 1, identify the trend. Step 2, mark the Asian range. Step 3, wait for London to sweep liquidity in the direction of the trend. Step 4, look for unmitigated order block. Step 5, wait for CRT confirmation. Step 6, enter. Stop above CRT candle. Target the nearest liquidity. That's it. No indicators, no guessing, and no chasing candles. Just structure, liquidity, patience. And here is the biggest lesson. Patience is your edge. Most traders lose because they cannot wait. They see movement and jump in. But the real money is made by waiting for liquidity to be taken first. Let the market show its hand. Then align with the real move. That is how you stop being the liquidity and start trading with it. If you study this chart carefully, you will see that nothing here is random. Every move had a purpose. Liquidity first, then direction. Remember that. Liquidity comes before expansion. If you master this concept, you will start seeing the market differently, not as chaos, but as structure. And once you see structure, you trade with confidence, not emotion, not fear. Confidence. If this breakdown helped you, comment below and tell me if you use the London liquidity sweep strategy and what pair you want me to analyze next. And if you want daily setups, live trade ideas, and more SMC education, join my private Telegram community. The link is in the description. Thanks for watching. Don't forget to subscribe and hit the notification bell so you don't miss the next video.